Hey, this is Kenny with Keller Williams Realty. Thanks for checking me out. This is my weekly video. And this week, I wanted to talk about the Fed raising rates today. As expected, they came in at 75 basis points, raising the rates a little bit. And that's 0.75 of 1%. And as expected, they're continuing to be aggressive. um, Funny thing is that the stock market had a good day after they heard the rates, and I think it somewhat has to do with not so much that they raised the rates, but what Chair Fed Bank Chair Jerome Powell said. He was basically saying that yeah, they're going to stay aggressive, and they're trying to bring inflation down. Um, but there are some signs that the economy is moving in the right direction as far as moving away from inflation. There's signs that the economy is slowing down a little bit, and their policy is working. So he kind of gave some hints and some clues that they're trying to get to a certain point, but they're not going to be able to raise rates forever. They're going to get to a point where they feel comfortable with, maybe by the end of this year or some point next year. Um, but it seems like what he was saying is they're going to continue to wait and see what happens. The next meeting is in September, so they have a little bit of time. Hopefully, it'll be moving in the right direction as they see fit, and they can do less next time. Maybe they'll do only a half a point. And maybe do a few of those, and then maybe at some point get down to maybe like a quarter point. Um, they've got a long way to go, but some of this stuff might be baked in from COVID. A lot of people, dropped out of the workforce in COVID. So what if those people rejoin the work market? Will the labor market start to even out? That's one of the big things. Like there's so many job openings, and then the wage growth is up. Like that may be a contributing factor to inflation. Why some of the prices are up because of maybe shortage of workers, and then the workers that are there are now charging a higher rate is passing on in the cost of prices. So hopefully some of this stuff will start evening out, and I think over time it's going in the right direction, and that's what the stock market looks at more than anything, like the trends and stuff. So sometimes the market can kind of sniff out what's going on before everybody else. And the Fed has kind of telegraphed what rates they were going to raise and that they were going to continue to do this. So the market may have already reacted to this, but some of the things that the Fed chair was saying was basically that if we start moving in the right direction, we may be at the end of the extreme rate hikes. And if we do have rate hikes, they might be at a lower level and more reasonable level. Their goal was to kind of front end load it and aggressively get the rate up to a certain level, and they might taper off. So I think that's kind of a silver lining, is we'll have a little bit more a market that is a little bit more predictable going forward, where people kind of know how to move, and then hopefully their policy will work and bring the prices of stuff back down. Like at the grocery store, food prices and stuff are really high. Like they want to bring those back to normal levels. Um, but anyways, thanks for checking me out. I'm going to wrap it up there. Continue to check me out every week, and thanks for tuning in.